$25 billion. That's how much Washington just allocated to the drone sector, creating a massive opportunity for those able to identify which stocks are likely to benefit most from this historic funding push and recent executive orders. Today's focus is on the companies and sectors positioned to gain as these funds hit corporate balance sheets. This is not just about delivery drones or air taxis. Trump's Golden Dome missile shield alone received $24.7 billion, and every component, from space sensors to kamikaze drones, connects back to these companies. Missing this could mean missing out on life-changing gains. Last week's $150 billion defense reconciliation bill includes $1.1 billion to build a domestic drone supply chain, $1 billion for kamikaze drones similar to those seen in Ukraine, and $2.4 billion for hypersonic counter-drone technology. Combined with executive orders fast-tracking FAA approvals, the sector is now primed for hypergrowth. The drone order is expected to accelerate the process for obtaining waivers and integrating drones into the national airspace system. Drones will need to communicate with the same regulators overseeing planes and helicopters, making the system smoother and lowering risks. With these reforms, the total addressable market could double by the year 2030, potentially leading to a doubling of share prices across the sector. However, many of these companies are startups, so, traditional value investor metrics may not apply, as profits are not yet present. Archer Aviation has partnerships with United Airlines and Stellantis, a $142 million contract with the U.S. Air Force, and $1 billion in cash. The company's stock is showing signs of a breakout, and institutional investors are taking notice. Risk management remains crucial, and each investor should follow their own rules. Joby Aviation is progressing with FAA certifications and has partnerships with Toyota, Delta, and Abdul Latif Jameel. The company delivered its first eVTOL to a U.S. military base, indicating that the military and law enforcement may be among the first to deploy these technologies. Joby maintains a solid cash position and remains U.S.-based, with the opportunity for further gains as resistance levels are tested. Dragonfly, a drone manufacturer with a strong focus on defense and government contracts, has delivered and battle-tested products. The company's stock, down 97% from its all-time high, may be poised for a turnaround as it consolidates and breaks out of extended periods of low activity. So, Unusual Machines doesn't actually make drones themselves, but instead they focus on manufacturing components. Their goal is to help build out American drone component manufacturing, creating a domestic supply chain. The company has managed to achieve tenfold year-on-year revenue growth, which is pretty impressive, but just keep in mind, as a small-cap stock, the volatility is definitely high. Now, let's talk about Gogo Inc. They're the leader in in-flight broadband and connectivity for business aviation. As millions of drones start flying, certified connectivity is going to be absolutely essential. Gogo is in good financial shape too, with a forward price-to-earnings ratio of 16, and they carry lower bankruptcy risk than a lot of those early-stage competitors. Walmart, which is already profitable, is aiming to become the first retailer to scale drone delivery across 5 states, covering 100 stores. By using Google's Wing for drone delivery, Walmart is already delivering thousands of packages every week in under 19 minutes. And with further expansion, they could reach up to 75 million people. Now, Amazon has been in the drone space for quite a while, and they're expected to compete aggressively with Walmart. Thanks to their huge warehouse network and big investments in robotics and drones, Amazon really stands to benefit if drone delivery becomes mainstream. If you'd rather have some diversification, the SPDR S&P Aerospace and Defense ETF, ticker XR, gives you exposure to a broad range of American aerospace and defense companies. This ETF is 99% US-based, and it's a good alternative for investors who want to avoid the risks that come with individual stocks. Hey, sharing this information can really help others spot opportunities in this fast-changing sector. If you want to learn more about risk management and picking stocks, you'll find resources at felix.org/getfree. Wishing everyone out there the best of luck as you navigate these new opportunities.